Let's take you to our special guest, then Bibek Debroy, Professor of Center of Policy Research, is joining us live from New Delhi. Appreciate your time, Dr. Debroy. Let's ask you straight away what you think is happening from a European standpoint to the impressions about India. We're under pressure every day. There is some sort of fresh headwind out there. First about the Eurozone itself, which is our biggest trading partner, and then its impact on US recovery, all finding its way on emerging markets.
Well, the external part is important, but many of our travails are internal and domestic. It's very easy to ascribe them to what is happening in Europe. So far as Greece itself is concerned, I think sooner or later Greece is going to exit. But the critical question that remains is, having exited, what is the competitive advantage that Greece has, which is required for rehabilitation of Greece's economy? And I don't see that happening immediately. Obviously, what happens in Europe and the uncertainty that Europe has implications for India, less so for the real sector, but more in terms of volatility of capital flows and volatility of exchange rates. The real sector is only important so far as exports is concerned. However, as I said earlier, Europe and Greece are convenient bogies, they're convenient scapegoats, because most of our problems are fundamentally internal.
I was just getting there. Most of our problems are fundamental in nature, and it's just getting bad by the day. You know, on one hand, you have industry output that's contracting. We're hitting record lows there. And then now we're hit with an inflation number of over 7%, which obviously indicates that the central bank is going to find it tough to cut rates. What do we do?
Oh, yes, absolutely. And I quickly want to say that I think the inflation numbers are going to get worse for two reasons. One, I don't think the power tariff increases have completely fed into this round of inflation figures. And secondly, these are month-on-month figures, and therefore they are a function of what the base level was. Consequently, beyond June, I expect the inflation numbers to be worse. However, the bigger problem, and therefore the RBI is in no position to cut rates. However, the broader problem is many of the problems that we are talking about, whether that's in the nature of investor confidence or something else, is under a broader umbrella of a complete policy paralysis. Monetary policy is important, but it's not that important. And in other words, even if the RBI were to cut the policy rates a little bit, I don't think it would eliminate this present climate of uncertainty.
Indeed, it may not, Professor Debroy, but you know, we've been talking about how the monsoon could lift some of the pressure on inflation. Do you really think that that is going to be possible, given what we are delivering right now, a very low or a declining IIP, eventually a sub 7% GDP, and inflation that's fueled by fuel prices and food?
I don't think the monsoon is going to help very much, because if one is just talking about agro products, we've got two kinds of problems. The first kind of problem is that there's been increased demand for various reasons, and we are stuck on agro products with a completely inelastic supply, because many of the necessary agro reforms have not been introduced. The second kind of problem that's happened is that there is an increasing gap between the price that the farmer gets and the price that the end consumer pays. Some of it is because to increase transportation costs, but some of it is also due to an increased disintermediation that's not happening, and increased intermediation that has happened. And therefore, so far as food prices are concerned, I don't think the inflation numbers are going to look better.
Okay, Professor Debroy, a tough one for you now. If you were Finance Minister Pranab Mukherjee, what would you do with fuel prices? I mean, you know, you ought to be hiking them, but then you've got an ally by the name Mamta Banerjee. What's the way out? And don't say you're going to be heading to the Rashtrapati Bhavan. That's not an answer.
Well, let's be fair. You are asking this question in 2012, but this is a question that should have been asked in 2004. The reason I'm saying that is one of the reasons why we are saddled with this petroleum product price problem is because we have allowed the backlog to build up. And because we've allowed the backlog to build up, any transition to market-determined rates will amount to a huge increase. Whereas had we continually reformed prices, as the original dismantling of the APM was supposed to do, then the incremental price increases would have been limited. However, in 2012, I do not think the finance minister has too much of an option. the option he really had is not so far as just petroleum product price hike increases are concerned, but in terms of containing public expenditure, in terms of targeting subsidies. Now, none of those have been done, whether in 2004 or whether in 2012.
Sure.
There is also a limited issue of the petroleum product indirect tax structure being remarkably non-transparent even now.
Indeed. You know what looks like more like an unlimited issue today is the rupee. It's on a downward spiral, and the foreign institutional investors are beginning to sort of aggravate the pain that the Indian markets, for example, are facing today. Professor Debroy, what is your view on the rupee from here, and do you anticipate that the stock markets will continue to see short-term money exit, and soon?
In the short term, I think so, because the problem is that A, we have got a current account deficit, which is increasing, and B, we've got capital inflows stagnating, not just of the institutional investor type, but also of the FDI type. And we are going around proclaiming to the world that there are going to be no reforms before 2014. Now, if you're going to do that, then obviously investor sentiments will be dampened and there will be some exits. So far as the rupee is concerned, had I known where the rupee was headed, then I would have gone out and made some money through speculation. But I do think in the short run, the rupee is headed downwards, probably to about 56 or so. However, in the medium term, the rupee ought to appreciate, because India will continue to grow. Even 6.5% is reasonable growth. I'm not defending that 6.5%, but I'm saying that 6.5% is a respectable enough growth. So over a medium term, one ought to expect the rupee to appreciate. But that's not what is going to happen in the short term.